chat. Let's just make sure everything's working like it's supposed to. We'll give everybody a couple minutes to get in here real quick. Market's not going to do a whole lot right now. All right, we're green light. Okay, so we did a market breakdown this morning. If you guys are in the Discord and if you guys are in the Telegram, you already saw that. I introduced to you guys my Tomahawk model. Nobody's seen that yet. But first things first, let's go ahead and get into these charts. Let's see something real quick here. As you guys already know, the first thing I do before I even stare at these charts, I go ahead and get on Market AI, and I want to go look at the economic calendar. I want to see if there's any high impact news today. This is important. I'm telling you guys exactly what I do every day so that way I'm protected in the market, okay? So March, we did have some red folder or some high impact news today at 9:30. So in about, I don't know, another hour, we'll see that. So price might not move that much, if I'm being honest with you, until that news event has come and gone. Excuse me. Still a little bit under the weather, guys. I know you guys were looking for me to be on here yesterday, and I was trying, but we're here today. So this is some high impact news that might have happened overnight. Iran, they're not looking to negotiate. So this can drag on for a while. It's affecting pretty much a lot of different countries in different regions because they rely on that pathway through Iran or around Iran in the waters to do their trading. So they exchange oil for food, and there has been no exchanging going on lately. Trump is trying to spread some propaganda on our side, telling us that they want to negotiate and that there's really no other targets for them to hit. They've already went ahead and put a new leader in place, but they haven't made it public. There was another guy that they just made the new leader over there in Iran, and they smoked him as well with a crazy bunker buster bomb. And it's kind of sad, guys. We're watching our president just kind of take out anybody that's in power over there, just one after another. It's like straight up murder. But it is what it is. Nothing we can do about it. All we can do is trade it. So Israel has also been evacuating different areas. I think they're expecting some type of escalation over there in the Middle East as far as war goes because they're moving a little bit different over there. We're sending doomsday planes over there. You got Israel evacuating different areas of the country out there, especially Lebanon. You got France trying to beg everybody to do a ceasefire. You got Russia saying that they're going to mitigate negotiations between Iran and U.S. and Israel. So everyone's trying to slow this down from escalating, but Iran said, no, we want all the smoke. So Trump's going to give it to him. One of the key things today, though, I want you guys to look out for energy. These guys are trying to target energy to hit us where it hurts, okay? That being said, NVIDIA, AWS, a lot of these cloud services, they do rely on energy, and Iran has already made threats that they might target them. So if you guys see any headlines about maybe some data centers get hit or something like that, that's definitely Iran, and that's them trying to retaliate, okay? So I'm looking out for that. I don't see anything right now besides just their leaders kind of being under the radar, and Iran has been letting some countries pass through the Strait of Hormuz, but they're not letting everybody come through. So I am watching this closely so that way we don't get any crazy volatility spikes in price. Let's go ahead and switch over to these charts. Let's get this pulled up here. Uh-oh. Come on. In 1 second, let me fix it here. There we go. Oh. This is giving us a hard time today. Lee, what's going on, chat? They don't want my charts to come up, chat. Why won't these charts pull up? Give me 1 second. All right, let me just close out Trading View real quick. Pull it back up. Pull this back up here. There we go. Just had it up a second ago. There. Golly. All right, so change the chart a little bit so you guys can see everything. All good. We got a new PC, so we're ready to rock. All right, so a couple things here. I mentioned that we're still in a tight range in a market breakdown that I posted earlier in the Discord and Telegram. When you zoom out and you go to a higher time frame, you can see we've just been consolidating for quite a while here. And the one time the price did give a fake breakout, it pushed right back up into it. Okay. Now, I did say that on the smaller time frame, it looks like it's setting up something that I call a tomahawk. And what that means is price will leave lower highs, right? But they'll leave wicks at the end of them. So we got wicks up here, we got a wick here, and depending on how price reacts right here, on a different time frame, we'll have a wick there, which means that price will hit a certain area and then give us a nice price run to the upside. However, we are still bearish ultimately. It's just a matter of when price wants to hit its level, so that way it can go ahead and push us back to the upside. Now, what we saw last night, because we did a nice market breakdown last night with some students, we saw what has led up to now to give us the idea that we're in bearish order flow. All right. Bearish order flow means that we're respecting different levels and we are respecting them to the downside. So price closes below certain areas, comes back to retest these fair value gaps and gives us a lower high. Okay, as you can see, let me erase this paint drawing. We can see that here, and we can also see that here. And then right here with this order block, we can see price respecting that level. And then ultimately this morning, you can see price leave the FVG, come back, retest that level, and give us another expansion to the downside, a continuation to the downside. So as of right now, there's no indication that we want to be bullish. All right. On top of that, we have this fair value gap here, and price is closed below it, and price is still below it, and now it's melting to the downside. Now, I told my student last night, I said, there's one thing before, when you get on these charts, there's a couple things you need to do. You need to know what has price done, and then where can it go. So before you even think about placing a trade for the day, when you're doing your markups, you need to know what has happened leading up till now, and then where can price go now that price has been respecting those levels. I told them to make sure you mark out buy side and sell side. If you guys don't know how to do that, I'll show you. Sell side liquidity down here. Buy side liquidity obviously up here. That's going to be the highest high. It's an intraday high, but it's the highest high. And then you also have an FVG resting down here on a different time frame. Let's switch to it's probably going to be the 2 hour maybe. Yeah. So 2 hour time frame. You do have fair value gap down here that price can come target. Okay. Right beneath that sell side. Now, if you're trading this though, your goal is not to go and try to hold. Oops. Your goal is not to try to hold for ultimate TP. Your goal is just to be consistent, especially you guys that are trading prop firms. So I say this because with all these rules in these prop firms, it's very important that you guys are aware that you're not going to be able to go for these home runs. You guys need to hit base hits. You guys need base hits so you guys can get those payouts. If you got a live account or you're swinging options, yes, you could do puts and possibly hold until you get down here because price can consolidate, retrace, and do everything else. Apex, more specifically, has those static drawdowns. So if you're already in profit down here and price decides, and you add it to your position, especially, and you're up $3,000 and price decides to do a nice pullback almost all the way to your entry to break even, you could potentially blow your account because you didn't take your base hit and didn't take your bread. So base hits, which means that target the nearest sell side liquidity or the nearest order block. An example would be right here. Price, I told my student last night, because I think right around like 9 o'clock, 10 o'clock last night. Yeah, 10 o'clock last night. Price is pushing down. We already know that they're not going to give this move that easy. Price clicked this sell side right there and then gave us a nice reversal back to this fair value gap, which is what I call max pain. But after that, price melted again. Your target is not all the way to the downside. Your target is now the nearest low because there's sell side liquidity resting below there now. So when price gives you this move, okay, you can put your stops above that fair value gap, right? Because if price closes above that FVG and starts shooting, then obviously we can see it starting to take buy side. So now you can invert this and take the opposite trade. But as of now, as long as you target that sell side liquidity, you're safe. And as you can see, price retracing to this fair value gap. Price retracing to this FVG. You got a nice entry here. Your target's going to be that low. And as you can see, price is already reacting and it's giving a pullback. So now, once again, you're not looking for this. It'd be nice to get it. Yeah, sure. But we need base hits to stay profitable. We don't need home runs. And honestly, guys, that was the biggest hurdle I had to overcome to be profitable. I had to understand that there's still levels between this entry and these TPs. There's still levels in between there that you need to look out for. If you're just staring down here and you're trying to catch these massive moves, right? These 600 tick moves, it's not going to happen that easy. You need time. You need price to play out, unless it's a rare photo event and you just so happen to snipe the entry for a news gamble. But TP is your nearest liquidity pool. All right. So now price dipped into there. That was pretty much a 1 to 3. Okay, nice little trade setup, and you should be done for the day. All right. These are the habits of a profitable trader. You need to take what you can, take your base hits, and come back and do it again the next day. You don't need to be on these charts all day. It's already what, 8:51. You could have already been off the charts right now. That's why I want to jump on here real quick, because I saw this trade setup playing out, and I just want you guys to see how and why. You see why and how you should execute it. Now, what has happened since then? On a 1 hour time frame, you do have a nice fair value gap here. If you guys are looking for any type of continuation move, you want to see how price reacts to this gap here. And as you can see, when we go down to the 5 minute, we can even make this a little bit more precise to current price. This level there. So let's see what price does when price retraces into that level, if we even get it. And let's see if they invert it to give us that tomahawk move that I was just talking about. You have a wick there, you got a wick there, you have wicks there. This tells me that price might potentially want to come higher after it's done seeking sell side. Okay. But all in all, once again, we're not looking for that move unless price gives us some type of hope candle to make it very clear that we got a change in order flow. Because as of right now, we have bearish order flow because price is respecting levels to the downside. If price closes below this order block here, if price closes below that, no, we'll type it out for you guys. We'll use OB negative. Make it a little bit bigger. If price closes below that level and it leaves the FVG behind, then yeah, potentially we can take that as an entry as well to the downside. And we can use that as a continuation and come take out those lows. But one more time, let me go look and see the calendar real quick and see if we have news coming up. Tomorrow we got some high impact news events, but nothing that I expect to really move the market that much. Nothing that I can see, at least. Let me check one more thing. Yeah, so we got some pre-market moves and we have JOLTS job openings, but yeah, I don't see them holding the market for any reason for tomorrow. So we might actually get this drip today. But as you can see, this would be the next target would be sell side. If you were in that first short, that'll be your first TP. And if you're trying to take this continuation, make sure you move your stop losses to profit, right? So that means that if you were in, what does that mean to put your stop loss to profit? I'll just show you real quick. So that means if you were in this short here and you had your stop above that high, you were targeting this TP at first, and you're still holding for that extension candle, that means that you're moving this stop to break even minimum or potentially to the next fair value gap that are left behind. So that means this level here would be right above, man, like literally, I'll draw it out for you, right above this fair value gap. Minimum is where I put my stops, because if price comes back, then this is technically protected. If price does this, which it did, and extends down, comes back and hits this level and gives you another expansion to the downside, which it can, at least it's going to be protected. But ultimately, when this candlestick closes, which it just did, now I'll move that same stop below to this order block. My stop is at this order block now, at this low. So I will use this low as my protected stop. If price stops you out, cool. You already took all of that. There's no need of being greedy, guys. And this is the fine line between greed and being profitable and being consistent. So that's pretty much the move for today. It's one direction. It's just dripping. We got our targets. We know where we need to go. And let's not forget, you guys ultimately know what I've been screaming for a while now. I'm trying to figure out how we're going to get down here to 22,000. So I've been bearish. I've been telling you guys this. You saw my stories. You saw my reels. We'll see what happens. I think there's going to be some type of headline that gets posted this week. But ultimately, that's my target, 23,000. Sorry, I'm still sick, y'all. But anyway, let's see how that plays out. Hopefully, that'll be the rest of the move for the rest of the week. We can get out of that consolidation range, which we're still in technically. But look at the melt, guys, live. That's crazy. It's so cool to be able to know where it wants to go before it happens. See if we want to stay on stream until it takes out this next sell side. It might give us a retrace and FOMO everybody in these shorts, though. If it was me. If I was a market maker, I'll flip it right here. right when everybody's bearish, I'll flip it. This is when a FOMO kicks in. This is why I wish I was in this position, but I got off to a late start this morning. Okay. Just checking my chat here. Okay. All right. What time is it? We'll wait for this new 30-minute candlestick to open here, so if we get a spike in volatility. Give it 3 more minutes, chat. Man, if this flips though, golly, there's gonna be some people that are gonna be sick. They're gonna be stuck down here. This is gonna be an example why I tell you guys, do not chase open candles. Do not chase open candles. Every time you see a candle pushing and right before you press that button, just imagine it leaving a bottom wick and you being stuck down there. So just imagine, because I know I'm trolling because all the breakout traders that trade like supply and demand and stuff, those guys are trading breakouts. I always laugh because every now and then I'll get one. Oh, let's take a peek at NVIDIA real quick. Woo! As you guys already know, when NASDAQ drops, that's pretty much what NVIDIA and a lot of the other high market cap stocks are doing. So, yeah, man, NVIDIA's got a target down here that it can come get. First of all, it's got this 180 level, and then it has the 177, 170 level. But let me look at, same for Meta. Everything's pretty much at the top of the range, and it's rejected and come back down. Meta has the same level lined up here. And then Tesla as well. Tesla's got these wicks down, this wick right here that can fill. I don't like this chart. This chart's ugly. Let's clean that up a little bit. I had that level circled, but let's look at Intel giving us a nice pullback here. Hopefully this level holds. If not, then it could definitely come back to the downside. And one more. Let's look at. We'll look up some defense stocks here. Yeah, so Palantir gave us this gap up to the upside. What's up, dog? Palantir gave us this nice gap to the upside, but it can come fill this level here. It could possibly dip down in there. This is a daily time frame, guys. So yeah. What's one more defense stock? Lockheed Martin. I think I had a level on here. But yeah, here we go. So I had this is Liquidity. This is Mr. Liquidity up here. That face right there. That guy, somebody entered at this high and they're stuck up there and they're waiting for price to come back. So again, this is a good example of why you should not be chasing open candles. You should need to wait for price to come to us. So what does that mean? That means wait for price to retrace to a level that we know has to get filled. And on a bigger time frame, this level screams retrace. So that'd be nice. That'd be a tell sign that maybe the war could be de-escalating. If Lockheed Martin and a lot of these defense stocks come down, that'd be really nice. It'll be horrible for oil, but yeah, that'd be real nice. Uranium's recovered from the last time we talked, guys. I think it was at like $12 and gave us a nice little pop closure above these FVGs. This is that tomahawk setup that I was telling you guys about before. When it lines up like this, you have, let's see, find the right time frame for it. Yeah, so remember, wicks here, wicks there. You got a nice wick here. Cleared that though with that one, but it left one there. Nice rejection there, and it has one there. That's a clear sign that price can potentially come give us a nice price run. Or this is when I'm gonna troll. I'm gonna troll some of you guys real quick. Somebody, I'm not gonna say their name, but somebody trades trend lines. You've probably seen their content before, right? They say trend lines. Whenever I see smooth trend lines, right? Whenever I see a trend line like that, on a higher time frame especially, I am always looking to break that trend line every single time, all right? So it just depends on how these candles are formed. And again, for the tomahawk setup to work right, you've got to have these kind of wicks showing at those highs, all right? For me to have a clear indication, and all that means is that price has already filled like these fair value gaps, or it already cleared these order blocks, and so on and so on. So that means that there's no more speed bumps because price already cleared it. And that's the tomahawk setup. So we can catch one here. I wonder if I can show you another example. I'll show you guys in the mentorship. Those of you guys that are in mentorship, I'll show you guys another example later. Let's go back to NVIDIA. So like I said, I said, hey, if I was a market maker, I probably wouldn't let price continue to drip. And you guys can see why it's important for you guys to take TP at these sell side areas. Not all the way down here, even though we're expecting those levels to get hit, but at these sell side levels. In fact, you see why it's important to move your stop losses in profit. I told you guys to move your stop losses to this order block. If price retraces and stop you out, so what? But at least you're not going to be stuck like Mr. Liquidity that chased this trade and they're in shorts and price just reversed on you. Okay? Because you'd be holding this position. So now it's you're holding your short because you chased this move, this expansion, this continuation, or your breakout trade, or your supply and demand trade, or whatever the hell strategy you think that works that you guys were sold online. If this is not what you need to do. You guys need to wait for price to come to you and then take those entries. Don't chase those trades. Okay? Otherwise you end up like Mr. Liquidity over here. All right. So we'll see what happens there. But the first move has already happened, guys. Price, I'll do it one more time here. I'll break it down for you. One more time, and then we're gonna get off stream because this is the new 30-minute candle, and I'm really not looking for a trade today. I'm still feeling pretty sick, but you had a fair value. So start from the top. For the top, why were we bullish? This is like how you can come up with your daily buys. Why were we not bullish? Bearish. See what I mean? Why were we bearish? Price is respecting levels and is giving us bearish order flow. What is bearish order flow? Price is giving us fair value gaps, leaving behind FVGs. Price is running up to those fair value gaps left behind and giving us a lower high. Same thing here, lower high. Same thing here, drop. Clean this up a little bit. For order block there, lower high. Price gave us a nice price run overnight. Retrace into this FVG, pushed up, lower high, melt. But price is also swept sell side. Okay, so price did all this, closed below this FVG right here as well, but it went ahead and swept sell side. That's why we're not looking for another continuation. In any event, and this stream is recorded, at any event, we get this move here. Oops. Drop, lower low, lower high, lower low, lower high, lower low, sweep, right? In golfing candle to the upside, which is what we just saw, retrace into a fair value gap or some type of order block left behind and give us another continuation to the upside. That's the only way we can start looking for long positions. If we don't get that, we're still bearish. Even if we get this move, even if we get this engulfing candle, if price comes back to this, because this is technically sweeping buy side, price comes back to this fair value gap of this order block right here. This is a very easy entry because you're putting your stop losses at the lows, okay? So that means you're putting your stop loss right here, right below this low. If price breaks that fair value gap and clicks it, cool. At least you can get ready to take the opposite trade because you know where it wants to go, all right? That's how you can prepare for reversals, and then that's how you can prepare for reversals, and then that's how you can minimize your losses and really redefine risk. Because the RR multiple from here to there, I'll show you, if you were to take this long to target that fair value gap, at least your stops are going to be right below this low, as opposed to you guys trying to take shorts, right? You guys are trying to take these shorts somewhere in here, and you're putting your stops way up there, which I do see some streamers do. That's a negative RR. Like, why would you do that? Okay. Okay, so that's what I got for you guys today on this stream. It's going to be recorded. Thank you guys so much for joining me. Once again, the Day Trade Academy is live. I'm going to be updating the students here today with another market breakdown when the market closes. Make sure you guys like, comment, subscribe, and I'll see you guys in the next one. Peace.